Yo, what's up, everyone? My name is Dom, and we're going to talk about unusual options activity. All right, let's kick it off with the disclaimer. This video is for educational purposes only. The statements made in this programming are solely the opinion of the show and are not a specific inducement to make an investment. One must perform their own due diligence and realize that all investments carry risk. There's no guarantee of profit. All right, everyone. The first one I want to bring up is Valet. Now, this is a iron ore materials mining company, and we saw some activity here in some of these October 1st options here. So these are shorter term calls here. They're out of the money calls, which I've really been focusing on. My strategy here is going with the out of the money calls here, or at least picking up out of the money calls and short term. Now, that means that somebody expects the stock to make a move extremely quick and extremely rapidly, depending on how far out of the money the call is that they're buying. Now, this person is betting that the stock is going to be above 17.5 by October 1st. Now, that's a few weeks out. Obviously, they might not be playing this trade until expiration, but either way, they're looking for a rapid move up in this stock here, and this stock is pulled back quite substantially, as we'll see from the chart. Now, I do like this trade here. I'm going to be looking at this one tomorrow morning. Valet. I also got into some other material stocks today, so I might take a pass on Valet because a lot of these material stocks trade together here. But this is a quality company. They have a good dividend, good balance sheet, in my opinion. Obviously, with the dividend, you're not going to be getting any dividend if you own the options, but you're taking significantly less risk on buying the options, especially if you're getting an out-of-the-money call here. Now, what I've been doing recently is I've just been buying the same call that they're buying. I have been buying the out-of-the-money call here. I have been buying the short-term one, whatever they're buying, and that has been actually working out for me really well. Usually I'll be doing vertical spreads, but I've kind of been switching up my strategy here a little bit and trying to figure out what works best for me, and sometimes going with the out-of-the-money call, that has been working pretty well for me. That's what I've been doing lately. Now, this stock has pulled back a lot. Almost 50% off of its highs, a little less than 50%, maybe about 40% or so, from about 23 down to 16. Now, before getting into this one, you might want to check out the spot price of iron ore. This thing does trade along with that because it is a material stock here, but this thing has traded down a lot. I think it has some good support here at the 16 level back from January 28th, thereabouts, or it looks like it hit that level again at the end of March. So I like this play here. I'm in some other material stocks plays that trade pretty much along with Valet, so I'm bullish on Valet. I like these trades here. I like this stock. We'll see what happens, everyone. All right, next one I want to bring up is Target. Now, I'm a little hesitant to get into this one because of how much of a run this stock has had. This stock is up like 40% year to date. You can just look at this chart. It was 65 back at the end of 2018 in December. Now it hit a high of about 267. Now, it trades at about 17 times earnings, thereabouts. Usually Target trades around 12 to 14 times earnings, but I will give them that they have increased their digital strategy quite a bit, which definitely leads to greater margins, better return on equity. So I think they can justify the higher multiple here. Now they're going all the way out to December here, and they're getting some of these calls. They're getting the 260 strike call. Now, I'm not sure if I'm going to enter this trade here just because of the fact that how much Target is up. But if you're bullish on Target, they're buying calls, so this could be a good entry to get in here. Me personally, what I would do here is I would buy the same call. I would go out and I would buy the December 17th 260 call. If you're really nimble and know what you're doing, you could buy the December call and then possibly short some calls out in October. So you could do what they call a diagonal spread or a calendar spread if you're buying and shorting the same strike. Diagonal is when you're buying the 260 and say shorting the 250 or shorting the 270 call. The calendar spread is when you buy the 260 December, sell the 260 October, or sell the 260 September. So that might be a good strategy if you're nimble and know what you're doing. But as I always say, Do not get into options if you don't even know what a call is, if you don't even know what a put is. You have to learn the theory of how options are priced, implied volatility. There's so much to learn about options, but once you get to learn it, there's so many different strategies you can deploy. Shorting calls to create income, shorting puts to help you, get into a stock at a better cost basis. There's just a plethora of different strategies to do. So I love trading options. It can definitely be super frustrating sometimes, but it's well worth. Once you learn how to trade options, you get significantly better at it. And to learn, sometimes that requires losing money. In my opinion, I've lost some money obviously trading options, but you got to take the loss sometimes, and you got to be able to learn from it and bounce back stronger. I know it's hard at the moment. It can get super stressful and super frustrating. We've all been there, but stick with it, everyone. So thanks to everyone who's been subscribing. I really appreciate it. Make sure to keep this subscribing up. Make sure to shoot a like so I know to keep making more videos like this. Make sure to shoot a subscribe. Show some love to the channel if you enjoy the content. We'll see you in the next one.